Hello everyone. In this video, we will go through the cash flow worksheet of the BA2 Plus calculator in finding the net present value and the internal rate of return of an investment project. The cash flow worksheet is used for problems involving unequal cash flows over equal time periods. Three buttons are used in the calculator: the CF, the NPV, and the IRR buttons respectively. CF stands for cash flow, NPV stands for net present value, and IRR stands for internal rate of return. First, we will key in CF0. The variable corresponds to the initial investment or the initial net cash flow. And then we will enter subsequent net cash flow amount as CNN, where NN stands for the cash flow number. And if the net cash flow amount are the same for consecutive periods, we can enter this as a frequency count FNN. That is, for the first net cash flow amount, we will enter as C01 and the corresponding frequency as F01. And then the next net cash flow amount, we enter this as C02 and the corresponding frequency F02, etc. Even though the net cash flow amount equals 0 for a certain period, do not skip the entering. We need to enter every net cash flow amount for every period. And if the net cash flow corresponds to a cash outflow, we enter this with a negative number. If the net cash flow corresponds to cash inflow, we enter it as a positive number. When we calculate the net cash flow amount for every period, we need to be careful about the timing regarding the profit and the cost throughout the investment project. The cost or additional investments throughout the project are made at the beginning of the time segment. And the profits are realized at the end of the time segment. I'll get into this with an example later on. Let's get back to the cash flow worksheet. Once the net cash flow amount are all entered, we can compute the NPV and the IRR. To compute the NPV, we need to enter the variable I, where I corresponds to the discount rate or the cost of capital. This is the periodic rate for the interval of each time period. And then we can compute the net present value NPV. And then for the internal rate of return, we simply press the IRR button. Let's take a look at the first example. Consider the following scenario. We have an initial investment of $800, and then net profits are realized by the end of year 1, 2, 3, up to year 6. Year 1, the net profit is $150. Year 2, 3, and 4, the net profits are $200. And then the net profits of $150 are realized by the end of year 5 and year 6, given that the cost of capital is 12% per annum. First, we activate the cash flow worksheet by pressing the CF button on the calculator. And if necessary, clear the work by pressing the second key and then clear work. Enter the initial investment as CF0. This is a cash outflow, so enter this as negative 800. Key in the number 800 first, and then press the plus or minus button. We get negative 800. Press enter. And then we enter the net profit by the end of year 1, which is 150. Plus the down arrow key to get C01, enter 150. This is cash inflow, positive 150. And then press enter. And then how about the frequency, F01? Even though we have the same net profit amount 150 by the end of year 5 and year 6, these are not consecutive periods. So we will enter this net profit of 150 in year 1 and the 150 by the end of year 5 and year 6 separately. So at this moment, we only have a frequency of 1. So enter 1 for F01. And 1 is the default frequency in the calculator. And then the next value, 200, corresponds to the net profit by the end of year 2, 3, and 4. So we can enter all this net profit in C02 with a frequency of 3. So we enter 200 for C02. And then enter 3 for F02. Not to forget to press the enter key after entering the value for the variable C02 and F02. And then press the down arrow key and we can key in the next cash flow amount, 150. This corresponds to the profit by the end of year 5 as well as by the end of year 6. A frequency count of 2. So we enter the cash flow amount 150 for C03. And then the frequency count 2 corresponds to the variable F03. All the information are entered, so we can quit the worksheet by pressing second and then quit. Quit is the second function over the CPT button. Next, we can compute the NPV or the IRR. To compute the NPV, we press the NPV button and then enter the value for the cost of capital. The cost of capital is 12%, so we enter 12 for this variable and then press enter. And then we can compute the NPV by pressing the down arrow key. We get the variable NPV plus the CPT button. And then we get negative 76.0643. And this is the answer for the NPV. Next, we can get the IRR. To compute the IRR, we simply press the IRR button and then compute the CPT. And then we get the IRR. The IRR is 8.5310%. Let's move on to the next example. Consider the following scenario. We have an initial investment of $950. And then there are further costs and additional investment. In year 3, $500, and year 5, $300. And a series of net profits are realized. Year 1, 550, year 2, 450, etc., until year 6, 250. The cost of capital is 12% per annum. In this example, we have additional cost and additional investment throughout the investment project other than the initial investment. So we need to calculate the net cash flow. Drawing a timeline is more convenient. So I have the timeline labeling the initial investment and then the cash inflow or the cash outflow by the end of year 1, 2, 3, up to 6. So for the initial investment, this is a cash outflow of $950. And then for the further cost or investment in year 3, because this is a cost, the costs are made at the beginning of the time segment. So this $500 are made at the beginning of year 3. The beginning of year 3 is the same time point as the end of year 2. So here I will put the $500 on the timeline corresponds to the end of year 2 as cash outflow. Similar for the cost in year 5, the $300 are made at the beginning of year 5, the same time point as by the end of year 4. So this is the $300 by the end of year 4 as cash outflow. And then the net profits, 550 by the end of year 1, and then 450 by the end of year 2 and 3, and then the remaining profit by the end of year 4, 5, and 6 respectively, $300, 250, and 250. In some periods, say by the end of year 2 and at the end of year 4, there are both cash inflow and cash outflow. To enter the value into the calculator, we need to get the net cash flow. So the net cash flow for the initial investment, the time point here is negative $950. And by the end of year 1, this is $550. By the end of year 2, we have negative $50. Cash inflow minus cash outflow. We get the net cash outflow of $50. So the net cash flow is negative $50. So we do the same for the remaining periods. And we will enter the net cash flow amount into the calculator. And then I convert this into a table for ease of referencing. All right, so key in the value into the calculator. Activate the cash flow worksheet. Clear all the previous memory if necessary. And then key in the cash flow amount of negative 950 for CF0. Negative 950. Press enter. And then we can enter the first net cash flow amount, 550. All right, C01 equals 550. And the corresponding frequency is 1. This is already 1 by default, so we do not need to change anything. And then we can enter the second cash flow. Negative 50. So we key in negative 50 into the calculator. And a frequency count of 1 as well. And then the next cash flow amount, 450, with a frequency count of 1. So enter this as C03, 450. Enter. and then F03 is 1. The next cash flow amount is 0. We still need to enter this. Do not skip that. Okay, enter 0 for C04 and a frequency of 1 as well. And then the next amount is 250. So key in 250 for C05. And then the frequency count is 2 for both end of year 5 and end of year 6. So we key in 2 for F05, press enter. And then that's it. We can quit the worksheet by pressing second and then quit. Next, we can get the NPV and the IRR. So compute the NPV, press the NPV button, enter the cost of capital 12% as the variable I, 12, and then enter. And then press the down arrow key to get the NPV variable. Press the CPT button. We get the answer for the NPV, $90.03. To compute the IRR, press the IRR button and then compute CPT. The internal rate of return, 15.8559%. Let's take a look at the next example. A company is considering a new software development project. The initial development costs are $3 million today. The project is expected to generate annual revenue of $0.8 million for the first year, $1.2 million for the second year, and $1.5 million per year for the subsequent 5 years. After the 7-year period, the software will become obsolete, and there will be no further revenue from the project. The cost of capital is 8.5% compounded annually. From that, we can compute the NPV and the IRR. Let's fill out the cash inflow and the cash outflow. Initial investment is $3 million. So we have a cash outflow of 3 initially. And then there's no cash inflow. Next, a cash inflow of $0.8 million by the end of year 1. And then 1.2 million for the second year, 1.5 million for the subsequent 5 years. So these are all cash inflow. And then how about the cash outflow? All 0. We need to get the net cash flow for every period to enter into the calculator. So we do the calculation, cash inflow minus cash outflow, we get the net cash flow. And then we can enter this into the calculator. Activate the cash flow worksheet by pressing the CF button. Clear all the work. And we start with CF0, -3. And then C01, the first cash flow amount 0.8 with a frequency of 1 only. And then the next amount 1.2, the frequency is 1. The next amount 1.5 for year 3 up to year 7. That is a frequency of 5. So we enter 5 for the variable F03. And then we can quit the worksheet. To get the NPV, we press the NPV button, enter the variable I, the cost of capital, 8.5. And then we can compute the NPV. NPV is 3.77. And here, these numbers are all in $1 million. So the NPV equals 3.778 million. And then the IRR, press the IRR button, and then the CPT button, compute. We get the internal rate of return, 36.0784%. The next example. In a new business expansion project, the initial setup costs are $6 million today, with an expected expansion cost of $3 million in the 4th year. The project is expected to generate revenue starting in 2 years, and is forecasted to produce year-end profits of $3.5 million for the 1st year and $2.2 million per year for the subsequent 3 years. In the last year of the project, it is projected to generate a profit of $1 million. The cost of capital, 10% compound annually. Fill out the table for cash inflow and cash outflow. $6 million initial investment. And then $3 million in the 4th year. So this table, the numbers here, 1, 2, 3, 4, 5, 6, 6, corresponds to the end of year. So a cost of $3 million in the 4th year. This cost should be made at the beginning of the 4th year, the same time point as by the end of year 3. So this $3 million corresponds to the end of year 3 time point. And then no more cost or investment by the end of other years. And then the cash inflow. Start to generate revenue in 2 years. And the year-end profit is $3.5 million for the 1st year and $2.2 million per year for the subsequent 3 years. So by the end of year 2, we have a revenue or the year-end profit of $3.5 million. And then the subsequent 3 years, by the end of year 3, 4, and 5, 2.2 million. By the end of year 6, a profit of $1 million. So this is a complete table corresponds to cash inflow and cash outflow. Calculate the net cash flow for every period. And we get the following result. Let's input this in the calculator. Activate the cash flow worksheet. Clear the memories. CF0, -6. All are in $1 million. And then C01 is 0. Do not skip that. Enter 0 for C01. Frequency is 1. And then the value for C02 is 3.5 with a frequency 1. And then C03 is -0.8. Frequency is 1. And then the next amount, 2.2. $2.2 million for consecutive 2 periods, end of year 4 and end of year 5. So we entered 2 for F04. And then the last value, C05, corresponds to the profit in end of year 6, which is 1. And then we can quit the CF worksheet, get the NPV, enter the cost of capital, 10%. And then we can get the NPV. The answer on the calculator is in $1 million, -0.275. So here the NPV is -$275,359.41. And then the IRR plus the IRR button, CPT, compute. And we get the IRR equals 8.5521%. That's it for today's video. Thank you for watching and see you in the next video.